If there's anyone who's a bull in silver and in gold, that's me. But I do think that near term, it's wise to be cautious.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 23rd through September 30th, 2024, while supplies last. First, we feature the 1-ounce gold Argor Heraeus Dragon Bar at just $69 over spot. Next, the 2024 1-ounce silver American Eagle is just $5.25 over spot, the lowest premium in months. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Peter Krauth from silverstockinvestor.com. Peter, thank you so much for joining us today.
As always, Elijah, it's a pleasure, and I'm looking forward to our chat.
Well, it's great to have you. And I should have mentioned as well that you're the author of The Great Silver Bull. So an expert on silver here. I did want to have you on because we're seeing $32 silver again, gold at new all-time highs. Your perspective on the metals markets?
Yeah, I'm actually a little bit surprised myself, to be honest. It's been a pretty relentless climb, gold in particular. We're looking at over the last maybe 4 or 5 months, several $100s just being tacked on very, very steadily. And it's quite the rise. If you look from start of the year, I think we're about 30% up in gold, which is really tremendous. We're only about 9 months in. And so I'm getting a little bit cautious, to be perfectly honest. That's what I'm telling my subscribers, that it's great to see. It's what we have been expecting for some time, but these things don't happen in a straight line. And I think actually, if I remember right, when we last spoke, I may have already been kind of indicating, my cautious outlook, because I think that we are probably going to see some kind of, at the very least, a consolidation, so a move sideways, or perhaps even a correction. I don't think it'll be very big. It's not something that would cause me to sell in any way, shape, or form. But it's something to keep in mind. And that obviously the equities would leverage that to the downside if it's a correction versus a consolidation. And so if anyone's looking to maybe add in the near future, I would do it kind of tactically. I'd be watching quite carefully. And, again, I could be wrong, but I think that I would be mostly waiting for a potential pullback.
And what kind of pullback would that look like? And what are the signs maybe that people should be looking out for that would signal that, the pullback's done or we're headed for a pullback now?
So, I think something like maybe that we're headed for one is bigger and bigger calls are from more and more mainstream outlets that gold is going to 3,000, that kind of thing. We've actually seen that in the last few days a little bit. Now, I saw just today that Citi is calling for $40 silver in the medium term. That's pretty bullish from, your kind of mainstream investment bank. And I can't remember who, but there were some calls from some of the larger banks as well, U.S. banks, for, us to head towards $3,000 gold. Remember, these have been sort of the most conservative and the least precious metals, the least sort of strong precious metals advocates you can imagine for the last decade or two. And now we're hearing calls for these metals to go considerably higher. So to me, that adds to my outlook in the very near term to be cautious. And again, I'm not here to kind of rain on anybody's parade. If there's anyone who's a bull in silver and in gold, that's me. But I do think that near term, it's wise to be cautious. And I've seen other analysts that I'm very hold in a very high regard, and they're starting now to say very similar things. So I feel like I'm in good company that way. I still think we're the minority, but it's the contrarians that tend to over longer term, do better. So another sort of reason to be cautious here, I think.
Right. And maybe just to flesh that out a bit for some of the reasons you're cautious, because I know back in 2011, we saw silver rise dramatically very, very fast, right? The time between, $30 silver and $50 silver was a couple months. And a lot of our viewers might not want to miss that kind of move. So what are some of the signs that you're seeing that are telling you that silver could be overbought right now?
Yeah, I mean, one of the other signs that I hadn't mentioned was if you look at the positioning in the futures markets, there are speculators and then there are what we call commercial hedgers. And the commercial hedgers are really considered the smart money. These are the big investment banks, some large producers. And so they will position themselves either for higher or for lower silver, obviously depending on their outlook. But because they deal with such, large numbers, values in terms of exposure to silver, and they have, these are professionals that do this, as their jobs and with lots of responsibility. And because of that, as I say, they tend to be on the right side of things. And their positioning in silver futures is actually at quite a low level right now, on the long side. So they are, I believe it's net short right now, and it's a pretty high net short position. So they feel that silver is quite highly valued in the near term, meaning that it doesn't have much upside in their view in the near term. And so they as well are quite cautious. Similar action in gold. And so, you have these indications, as I say, from what we call smart money, that it's getting a little rich at this point. It's been a pretty relentless rise. And they just look at probabilities and the odds in their view favors, like I say, I think a consolidation over the next short while. Maybe we're talking a matter of weeks or maybe even a month or so. And so, yeah, as I say, they're positioning for that.
It is good to see what the big money is doing because they're usually, as you mentioned, they're usually on the right side of things. So that's very insightful there. I did want to ask you more about silver fundamentals. You've talked about this recently. Now, one of the things that is really a lot of people have noticed over the last couple of years, obviously, is inflation, right? And that's one of the big topics, right, in the political sphere right now. We're seeing the official numbers come down and the Fed even cutting rates, half a point, a week or so ago. So your perspective on that, you've said that inflation is actually becoming structural and the problem is not over. So why do you think that?
Yeah, so that's a great point. In fact, I did talk about that recently. In a recent presentation, I looked at where inflation was. If you go back, let's say from the Great Financial Crisis, so 2008 or so, up until right around the time of COVID or a year after that, and that was really about 2%. And I clearly remember the Fed and other central banks being sort of antsy and anxious about trying to get inflation up. Their worst nemesis is lack of inflation or deflation. They say they don't want inflation too high, but they certainly don't want deflation. We just have to look at the kinds of things that Bernanke has said in the past about the Great Depression and so on. And so post-financial crisis, as I say, until around the time of COVID, was averaged right around 2%. But since COVID and the massive printing that we've seen, there are some things that look like they're becoming embedded now. We've got things like the ability for labor to command higher wages. We're looking at certainly we can pretty much agree that COVID triggered the end to some forms of globalization. Supply chain management really now is looking at sourcing things much more closer. Anything that's sort of vital or critical, they want to have options to be able to source these kinds of things much more closely, closer to home. You've got the energy transition. This has become sort of widely accepted, embedded, mandated, etc. And then the fourth item is defense spending. And, in the last couple of years, we have Sadly, it seems like more and more wars are breaking out, and they don't seem to be ending anytime soon either. There's more and more mistrust, partly as well, I think, related to COVID. And so these are all things: labor, end of globalization, energy transition, defense spending. These are things that are all sort of layering on top of where we were of 2% inflation. And I think they probably add up to somewhere around an additional 2%. So I think we're at a level where we're going to see an average of structural inflation much closer to 4 or 4.5%. I think, I've said a few times, I think 3% is the new 2%. And frankly, I think it's actually higher than that. So these things, as I say, they're becoming embedded, and it's going to be a real challenge. If you look at what happened in the 70s, we had successive waves of inflation. So what would happen was you got that first wave in the late 60s, early 70s. The central banks would step in, raise rates, and that would calm things for a while, which is what we're experiencing now. So it's very easy to relate and understand that. But what happened was, naturally, they didn't raise rates and keep them up. They started to back off and start cutting, which is, again, what we're doing now. Well, interestingly enough, if you look at that very first wave in the 70s, by the time, once it bottomed, it only took about 12 months for inflation to start climbing back up again in a very meaningful way. And we ended up at inflation that peaked above the first wave. So frankly, I think that's what we're in for this time as well. We're going to get successive waves of inflation, and it's going to be very challenging. And we know from the 70s that the 60-40 portfolio really had a tough time. In fact, the entire decade of the 70s, it had a net real return of minus 3% annually. The S&P and the Dow were flat for a year without accounting for inflation. So I think that's sadly the kind of outlook that there is. And so commodities did extremely well. People really need to look at that closely and factor in at least some sort of allocation to the commodities sector, and especially the precious metals.
That's such a good point. And a lot of people have paralleled what's happening right now to the 1970s. I know Tavi Costa has talked about quite a bit these different waves of inflation we saw back then, and how we might have just seen the first wave. We could be going into the second and third here shortly.
Exactly. That's a great point. And so, in fact, in my book, I quote some of Tavi's work. He does fantastic work, and I'm happy to use it and give him credit for it. One of the interesting charts that he produced recently shows what inflation expectations are, from the general public, and these are expectations going out 5 to 10 years. So this chart goes back to, I think it's the early or mid 1990s. And so it never went above 4%, even at the peak of the financial crisis back in 2008. And it peaked at 4, and it quickly dropped. And then it dropped and it went sideways for a while and averaged around 2, maybe 2.5% for, as we just mentioned, about a decade. Then it ran up when we got to 2021, 2022, and even in 2022, when we were peaking at 9% inflation. I remember well, in the middle of around July of 2022, that's like triple of what official inflation is right now. Even then, people's outlook for inflation did not pass right around 4%. Fast forward to today, I think they just thought, hey, this is a one-off. It's the COVID issue, and this is going to go away. Well, 2 years after that, or just a little more than 2 years after that, their outlook is for inflation to actually be even higher than 4% over the next 5 to 10 years, more like 4.5%. Is what they're expecting. So I think that, and I talk about this in the book as well, I think that, this has become embedded. People are starting to really believe and accept that inflation is here to stay. It's not going away. And there's something people need to remember too, is that it's one thing to see inflation, see it tick up, and then see it back off. But even if inflation went to zero today and stayed at zero for whatever, and the next few years, that does not change that we're at a new, much higher price level, right? That's not going away. That doesn't mean that prices are going down. That would just mean prices are staying at this new elevated level that we've reached. I think people need to understand that. So even lower inflation still means higher prices than where we are. So, it gets into the weeds of it a little bit, but it's not a difficult concept. I think people understand that. And if they see prices rise, they should expect that, just perhaps rising for the next little while, not as quickly as they have been. And I think, like I said earlier, I think that we may be as little as a year away. I hate to say it, but before prices start rising again at a more accelerated pace, like we lived through over the last few years.
When it comes to inflation rate, as you mentioned, it's the rate of change. It's not looking at prices compared to, so even if we have 0% inflation going forward, prices are still elevated from where they were a couple of years ago. And it's not like we're likely to see deflation where we'd actually see prices come back down. So I remember someone sharing a chart, right, where prices just skyrocket and then they stop moving higher, and they just slightly move higher just a little bit. And they're saying, well, the Fed is so proud because prices are up here, not, they didn't continue to rise dramatically. It's like, well, people are suffering right now because prices are here instead of prices being back here. So that distinction is so important.
Exactly. And I think we all know that wages have not kept up with these rises. And that's people's reality, is that, perhaps they won't rise as quickly. And like you say, they take credit for that. Maybe prices will not rise as quickly in sort of near to medium term. But the reality for many people is that their wages haven't even kept up with the rises that we've seen. And so, it's quite the quandary. It's something that, I talk about in the book, that is called Financial Repression. And, that's central banks keeping rates, expressly low, on purpose. And if you're in an environment where they're keeping rates below the rate of inflation, then you have you have negative real rates, and that really eats away. Imagine, the boomers are probably the largest retirement grouping or section of the population that we've ever had, and so most are trying to live off of their savings, right? And that's at least the goal. But if you're in a negative position, think about earning very small amounts, even on, a large nest egg. People cannot, it should really be that they can live off the interest only, whether it's, tighter or more comfortable is one thing. But essentially, if there's enough saved up, they should be able to live off the interest. That is simply not the case for many anymore. They have to eat away at their capital. And that's financial repression. It's not an accident. It simply makes these large debts that federal governments have easier to pay back, because they're paying back with inflated dollars, that have less buying power. So it makes their job easier, and the average person, has to deal with these realities.
And I think as we're talking about inflation and it having an impact on silver, obviously inflation has an impact on commodities in general, right? But I think part of that discussion is using the assumption that silver is also a monetary metal, similar to gold, right? Where it's reacting to fear with respect to the currency, right? Is the currency going to have value in the future? And people rush towards monetary metals in that case. People have made the point that, silver has been used as money. Even in some languages, silver is the same as money, right? The word silver is synonymous with money. But recently, over the last 50 years or so, many argue it's acted more as an industrial metal, and central banks aren't really buying silver. It's not the monetary demand is just not there anymore, and there's been this fundamental shift away from using silver as money. What is your perspective on that? I know obviously there are industrial components to silver, and there's a lot of bullish fundamentals there. But your perspective on that argument that we shouldn't look at silver as a monetary metal anymore?
Yeah, I mean, it's true that it has become less of a monetary metal. And so a couple of thoughts around that. One is that if you look at what happened, I believe it was 2021. If you look at the statistics that are put out by the Silver Institute, the investment demand for silver was off the charts. It was more than we had ever seen before. It was something like 330 million ounces, I believe. That was a third of the entire supply of silver for that year. So it can really come in waves. The other point that I want to make is that and it is the case, I do believe it's the case that we're sort of in a new paradigm, so to speak, where silver has become and is becoming more and more of an industrial metal. That, let's say we've shifted from 50-50, half investment, half industrial. And we've even gone, which I think is pretty much the case now, we've gone in the last few years to 60-40, meaning 60 industrial, 40 investment. What that says to me is, of course, these can continue to shift. This is not set in stone, but I believe a lot of the industrial demand is very robust, even in an economic slowdown, because so much of it goes to solar, electronics. There are many applications now, and because of the energy transition, a lot of these uses are almost difficult to kind of wind down, especially solar, for example. So much of that is going to continue to grow for multiple reasons. But I think that the industrial demand side of it will stay quite steady. But because it's grown, and if let's say it stays and doesn't continue to grow, but let's say it stays over the next few years at 60%, this new smaller portion that's available for investment, now 40% rather than 50%, to me means that when people do turn to silver as a monetary instrument, the way they did in a very big way in 2021, and even the year after, I think it was 2022, it was quite high, over 200 million ounces again. When they do shift to that, and that's going to happen again because it's a very sort of flowing kind of situation, and there's a lot of FOMO involved. People when they see that move, they kind of jump into it quite quickly. All that means to me is there's even less silver available for that portion, for the investment demand. So I think that's going to just make it rocket even higher, because if you've got this more limited supply for this particular use being investment, and people will really come back to it in a big way, the demand's going to just push the price of silver up even faster. So I think, we're going to be in for a silver squeeze, sort of 2.0 or 3.0, within the next probably couple of years. I do think that's something like that's going to happen.
And it's amazing the different lines of argument for silver, right? Because you have the monetary argument with inflation and all of that. You have it being a commodity. You have it being an industrial metal that's, in a deficit right now since 2021, as you've mentioned before. I did want to get into some of those the industrial demand for silver and why you're so bullish in that area. I know silver imports to China, you've mentioned, are at a new record. We, as I just said, and you've said before, that we've had a net silver deficit since 2021. India's demands for silver is up. Your perspective on the industrial side of things?
Yeah, so exactly. China has there was a recent chart again from Tavi Costa where he showed silver imports to China, and these are 4-month change charts. And going back to, I think it was around 2009, 2010, we had an all-time high since that period in the 4-month change in silver imports to China. So I believe that some of that is investment. I think more of that is for the production of solar panels. And I know from speaking to mining executives that the demand from China is very, very tight. One in particular has told me that they sell half their production to China, the other half to the West. And he said the Chinese buyers are basically chomping at the bit. They are prepared to pay a couple of dollars above spot even. They're prepared to pay in advance of delivery. They really, really want that metal. And then you've got India, which I think that is slowly becoming the new China for silver. India is forecast by the International Energy Agency to experience the largest demand growth for energy of any country over the next 30 years. And their silver imports have been off the charts. I mean, in February of this year, they imported it with 70 million ounces, and that was about 64%, I think, of the entire level of imports for 2023. And in the first 4 months of this year, they already surpassed their imports from 2023. We had another big spike in the month of August, when you look at the numbers. And I just think that, there are different things driving that. A couple of months back, the Indian government cut back, I think it was about 2/3 of the duties on importing gold and silver. So that just gave a shot in the arm to the precious metals sector imports. Obviously, it cut the price for them, and so they imported a lot of gold and silver. And it's still quite small when you compare it to China, but their annual manufacturing capacity in India for solar panels is expected to triple from 2023 to 2027. That's still going to be at somewhere like maybe 5% or so of China's levels. China is dominating the industry worldwide at about 80% of manufacturing capacity. But I think that India, for these different reasons that I've mentioned, is really a factor to watch very closely when it comes to silver. They're very, very precious metals savvy. They have a strong affinity to them. They understand them very well for very good reasons. And so and with gold at such high prices, all-time high prices. People in India are like many other places that have history with precious metals, and they're looking for deals or at least more affordable options. And silver certainly fits that bill versus gold. So it's definitely one to watch.
You've also mentioned how silver could be the new uranium. A lot of the bullish fundamentals that made people and on this show talk about uranium before it made its big move last year. A lot of those same fundamentals apply to silver as well.
Absolutely. So there's a very sort of notable investment house called Gehring and Rosenzweig. I believe they're out of New York, and Leigh Gehring managed at one point a few years back, I believe it was the world's largest commodities fund. So he knows what he's talking about, and he recently, or the firm made a comment on the uranium market, and they were saying that. They looked back at uranium and saw that about 5 years ago, they became bullish on uranium because the market had moved into a structural deficit. Reactor demand was outstripping supply, and the buyers for fuel were really going to what they called secondary supplies. They, because of Fukushima, and this massive pullback globally, and cutback of nuclear power production, there was a lot of secondary supply. So uranium fuel just sort of piling up in inventories, and so the buyers for the fuel were able to just tap into these inventories and not put really any pressure on uranium miners to produce uranium to be converted into fuel. They could just, as I say, buy from these above ground stockpiles and draw down on them. And that kept prices low and didn't really disturb the market, so to speak. Well, I talked about this before, and if you look at what happens in silver, you and I have talked about this. It's been in a structural deficit for 4 years. I did some research and tried to figure out why is this kind of ongoing persistent deficit not pushing up the silver price. And to me, at least, the most obvious answer becomes we have had few billion ounces of silver supply sitting in futures markets, sitting in ETFs. And since early 2021 or so, these major futures markets have seen their inventories drawn down. And that has allowed especially the industrial users to tap into a silver supply without pressuring the demand side that would have needed to have been met from mining, for example, or even recycling. So, these supplies are much, much lower now. We're looking at, them being at maybe 20 or 30% of what they were 3 years ago. And I think that game is almost over. That's playing itself out. We're getting really close. And so when I heard this statement from Gehring and Rosenzweig in terms of, the conclusion they came to on uranium, I thought, wow, that is a perfect parallel for where we've been in silver over the last few years. And then look at what happened to uranium. It absolutely exploded higher. So I think that's a very appropriate parallel, for the silver market and what may lie ahead.
All right. Well, it should be exciting times ahead. If people are interested in learning more, they can go to silverstockinvestor.com or read your book, The Great Silver Bull. Can you tell us a bit about those?
Sure. So silver stock, I'll talk about the book very quickly first. The book is really an overview of the entire opportunity in silver. It really gives someone an overview of, I start with the history of silver. I talk about macroeconomics and silver's role in that. Then I talk about the supply demand dynamics in the silver market to understand where silver comes from and to understand where it goes, how it's used, and who wants it and for what reasons. And then the growth outlook in the demand on the demand side and the limitations on the supply side. Then I talk about what drives the silver market. There are some very particular things for silver versus other metals. And then ultimately how to build a silver portfolio and eventually how and when to sell, because this will peak like it has in previous secular bull markets. You'll want to be ready and you'll want to look for the signposts for how to and when to sell. That's an overview of the silver opportunity, what I consider a generational opportunity. Then you've got my silver newsletter, which is what I consider more of a real-time way to track what's going on in the silver market. It's more, nimble in terms of what's happening with the silver price. It tells you, I tell you what I'm doing in terms of stocks that I like for what reasons. I cover the entire market, everything except futures, silver futures. But I talk about physical silver. I talk about silver ETFs, both metal ETFs and minor ETFs. And then the large producers all the way down to the junior explorers. So really, people can, if they want to have a look at the book, it's The Great Silver Bull, and my newsletter is silverstockinvestor.com. That's where you'll find the newsletter and more information on that.
Fantastic. Well, Peter Krauth, we really appreciate your time today, as always. Thank you so much, and God bless.
It's been a pleasure, Elijah. Thank you so much for allowing me.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 23rd through September 30th, 2024, while supplies last. First, we feature the 1-ounce gold Argor Heraeus Dragon Bar at just $69 over spot. Next, the 2024 1-ounce silver American Eagle is just $5.25 over spot, the lowest premium in months. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.